Most investors see a great deal on Zillow and jump in headfirst. They see a low price, a renovated kitchen, and think they've found a gold mine. But there's one hidden red flag in these listings that could cost you $20,000 in your first year. I've spent years analyzing thousands of properties to build a passive income portfolio that actually works. I've made the expensive mistakes so you don't have to. Today, we're going live. I'm pulling up 3 real Zillow listings right now. I'm going to run the numbers on all of them using a professional analysis framework. By the end of this video, you'll see exactly why I'm skipping 2 of these deals and why one is a definite buy. You'll learn how to spot the traps and identify the true cash cows before you ever sign a contract. Let's dive in. Here is the reality. Most people treat Zillow like a shopping catalog. They see a price, they see a projected rent, and they do some quick mental math. It looks like a win, but that's exactly how people end up with a money pit. See, the Zillow math is a trap. It ignores the things that actually kill your ROI. I'm talking about the 20-year-old roof that's one storm away from collapsing. The HVAC system that sounds like a jet engine. The hidden property tax hikes that kick in the moment the deed transfers. If you only look at the surface, you aren't investing. You're gambling. Imagine spending your hard-earned savings on a property, only to realize in month 3 that you're actually losing $500 a month. Now, instead of passive income, you have a second full-time job managing a crisis. That one overlooked red flag. It's the difference between a portfolio that funds your retirement and a mistake that costs you $20,000 in year 1. Most investors are just guessing. But guessing is a great way to go broke in real estate. Here is the truth. Zillow is a discovery tool. It is not an analysis tool. Most beginners see a price and a projected rent and think they found a gold mine. But to avoid that $20,000 mistake, I use a strict 3-step filter, the 1% rule, the cash-on-cash return, and the hidden capex check. Let's put this into practice with 3 real listings. Deal number 1. On the surface, this looks like a home run. The asking price is $150K. The estimated rent is $1,500 a month. That's exactly 1%. Most people would call their agent right now. But look closer at the taxes and insurance. The property taxes in this specific county just spiked. Once you add in a 10% vacancy rate and property management, your actual monthly cash flow drops to nearly 0. You aren't investing, you're just buying a liability. We skip this one. Deal number 2. Now this one is safer. The numbers are steady. It'll cash flow about $200 a month. But here is where the hidden red flag comes in. Look at the HVAC and the roof age in the description. They're both 20 years old. A new roof and furnace will cost you $15,000 to $20,000. That wipes out your profit for the next 8 years. Unless we can negotiate that $20K off the purchase price, this is a trap. Skip. Finally, deal number 3. This is what we're looking for. It's a duplexer. Price is $180K. Total rent is $2,100. That's well over the 1% rule. I'm using PropStream here to see that this zip code has seen 5% growth year over year. The units are dated, but the bones are solid. This is a value-add play. We spend $10K on paint and flooring, bump the rent by $300 a month, and suddenly our cash-on-cash return jumps from 6% to 11%. This is how you build wealth without a full-time job. This is a buy. To track these numbers without losing your mind in a spreadsheet, I plug everything into Stessa. It automates the bookkeeping so I can focus on finding the next deal 3 instead of staring at receipts. Now, I didn't just guess these numbers based on a Zillow description. To get the real data, I used PropStream. It lets you see ownership history and actual market trends before you even call an agent. It's the difference between guessing and knowing. But finding the deal is only half the battle. To manage the actual cash flow, I use Stessa. It automates your bookkeeping and tracks your ROI in real time. No more fighting with messy spreadsheets at 2 a.m. Combining these two tools is exactly how I avoid those $20,000 mistakes I mentioned at the start. It turns a risky gamble into a calculated business move. If you're ready to analyze your next deal with professional precision, click the links in the description to get started with PropStream and Stessa. And if you want more live deal breakdowns, hit that subscribe button. Let's build that wealth together.